Today we're bringing you what others won't tell you about the rising interest rates. Let's go. What's going on, YouTube? Welcome back for another edition of Living in Coastal Delaware. I'm your host, Matt Lunden, your favorite Coastal Delaware realtor, and today we're discussing the rising interest rates and some things that others may not be telling you. Before we dive too deep into the video, as always, if you could do me a favor, hit the subscribe button down below and smash the notification bell next to it. And then if you are someone that's looking to buy or sell real estate here in Coastal Delaware, I would love the opportunity to work with you, so please do not hesitate to reach out. All my information is down below in the description and here on the screen. Now let's dive in. So as we take a look at the rising interest rates, it's no secret that rates are going to continue to go up. Now, many agents are going to tell you, and many others in the housing business are going to tell you that we're at 6% interest rates, and historically speaking, that's still low. Now, while that may be the case, and across all of the history of mortgage rates, yes, 6% may be low, but in comparison to where we were at the start of 2022, 6% is certainly higher. So I just wanted to dive into some nuances there and the effect it's going to have on your affordability and what you can look forward to when you're looking to finally make that purchase. So if we go back to January of 2022, interest rates were about 3%. So if you had a $400,000 home at a 3% interest rate, your monthly mortgage payment was about $1,700. Fast forward to today, which is the end of July in 2022, and the interest rate is now about 6%. So that same $400,000 home is now going to cost about $2,400 a month. So that $700 a month is quite a bit of money. That's not going towards your principal at all. That is just strictly in interest. So that's just sinking money that you're never going to see again. It's just going straight back to the servicer of the loan. Now, the issue there is, if you were somebody that was shopping on the edge of your budget, you may have been stretching yourself a little bit thin there. Likely now the interest rates have pushed you to where your debt to income ratio is probably too high and you no longer qualify for that mortgage. So if you were looking at that $400,000 home, now you're probably looking at something in the $300 to $350 range, and nothing else changed aside from the interest rates. It's not like the home got more expensive or anything else like that. It's just that the interest rates have changed, and now all of a sudden you cannot buy the same home. So if you were looking in January and you were looking at $400,000 homes and you haven't found the one yet, it's probably time to scale back and start looking in that $300 to $350 range, because your payment's going to be about the same on those, unfortunately, and you're going to end up getting less house now than you could have just a few short months ago. Now, again, what most people aren't telling you is, historically speaking, yes, that is a low rate, but it's still high compared to where we were, obviously. Through 2021, we saw some as low as 2.5%. So 6% is certainly greater than that. And even in this year, the interest rate has doubled from where it was. And the big thing there is that the Fed has come out. They said they're going to issue another rate hike. And that rate hike is just going to increase mortgage rates even more. So if you have not found the house yet, you're an active buyer, you have not found the house yet, if you're finding some that fit most of your criteria, but maybe they're missing one little thing, it might be time to start considering, getting into that home or moving forward on that home, just to save yourself some money on the back end, and make sure that you're not waiting until the end of the year when interest rates are even higher and you're getting even less home, and that's just going to create a whole bunch of headache for you. Again, historically speaking, yes, I know the rates are low, but in the grand scheme of things, in comparison to where we were, they are not so low. So it's important that you keep an eye on your debt to income ratio. So be in contact with your lender. So if you've gotten pre-approved and you haven't found the house yet, and maybe it's been a couple months since you got that pre-approval letter, it's time to get that updated, because your debt to income ratio could change and the amount that you qualify for could change. And I would not advise right now in this market shopping at the top of your budget. I would scale it back a little bit just to leave a little bit of wiggle room there. You don't want to be disappointed in the end thinking that you can afford something all the time. All of a sudden it comes time to lock your interest rate, and your interest rate is a point or two higher than what you had been pre-approved for, and now you don't qualify for that home, etc. So it's important that you're not looking at the very top of your budget. If you are someone that's stretched a little bit thin and you're kind of borderline on that debt to income ratio, it's important that you are scaling that back and just making sure that you're staying within your budget, because as interest rates go up, it's going to affect your affordability. It's going to affect the budget of your household. If you do stretch yourself thin and you get into that house and that payment has increased X amount because of the interest rate, by the time you get rate locked, what you can spend your money on changes a little bit. Again, back to that same example as before, that $700 a month, that's groceries, that's your fun money, that's your investing money, whatever you're looking to do with that money, that's $700 that's, again, just going away. So you don't have that $700 to spend on whatever you have in your household, your bills, etc. So it's important to stay in contact with your lender, stay in contact with your real estate agent to make sure that you guys are looking at the right properties and you're figuring out the right things for you. As always, it is very important during the process to remain in contact with everyone so that you are not caught off guard. You've been waiting a few months to find the home and all of a sudden you can't afford that home when you finally do find the one. I hope you guys took some value away from today's video. As always, if you could do me a favor, hit the subscribe button down below, smash the notification bell next to it so you can stay in the loop each week when we discuss all things Coastal Delaware. And as always, if you are someone that's looking to buy or sell real estate here in Coastal Delaware, I would love the opportunity to work with you and I'd love to hear from you, so please do not hesitate to reach out. And then if you have some different thoughts than I do on what the interest rates are going to do and how that affects your affordability, as always, do me a favor, drop a comment down below. Do not hesitate to let me know your feelings. If they're different than mine, if they're the same as mine, I would love to know. I look forward to seeing you guys next time. Peace.